Let's be real. We get into business to make money. Our reasons may vary. Our main focus may be providing for the needs of our families. Maybe it's about having disposable income to do some things that you love. But we are here to earn a living, to improve our quality of life or the quality of life for other people that we care about and love. And that means we are working with money, 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 money. It's real. We cannot be shy about talking about money and finances when we talk about business. We've got to own it because it is a great responsibility. It's a blessing, but it takes some work to work it out right. One of the things that's grieved me has been watching well-meaning leaders who did not trust themselves give over financial management to a professional who wasn't professional at all. They would give over their finances to someone who seemed confident but did great injustice to their business's financial records. Out of selfish ambition and selfish gain, caused them to pay them more than what they should have, pay more in taxes just to be able to do tax work for them and even create issues for them so that they could have some issues to fix. This is not going to be your story. You're going to be savvy about your business's finances so that you can manage them well yourself. And eventually when you do hand that over to an employee or a contractor or a firm, you'll know what's what. You'll know enough to know that they're doing the work well. They will respect you because they'll know that you're looking out for the interest of your business and they can't do one over on you. Of course, you're working with someone if you're working with someone who's great and reputable, they will appreciate your knowledge and look forward to strategizing with you. I believe that the best business owners know the right little bit about everything so that they can make sure that what's going on in their business domain is right and good. So we're going to get into financial reporting and bookkeeping today. I believe simple, efficient financial record keeping. Good record keeping with your finances will help you have a good, clear picture of what's happening with your business. You can see where you are, where you're going, what you need to grow, and it will help make tax season and tax payments and filings way easier. And keeping well-maintained financial records is going to help you with projecting and budgeting year over year for the business work that you're doing. Now we're going to review some corporate finances basics, key documents, phrases, and bookkeeping principles that will get you started. I'm also going to show you one of my own personal principles. I know that finances are not my expertise, but I've learned enough to know what financial experts should know to serve me well. And if they don't know 2 or 3 or certain specific things, I know this person is not worth working with. So I'm going to help you, even if you're not a financial expert, know how to choose the right financial experts with whom to work. So let's get into the details. Okay, there's one particular number that you're going to need for your business, and it's called the Federal Employer Identification Number, FEIN. You'll also hear of it as the EIN, the Employer Identification Number. You're going to use this for tax and business purposes. Generally, all businesses need them, but a sole proprietor, self-employed person working on their own, a contractor working on their own who has no employees could get away without having one. And you'll need this EIN to pay payroll taxes, pay income taxes for certain businesses, do some tax reporting, open a bank account, obtain a loan and funding and grants for your business. It's best to obtain this number when you first open up your entity so that when you open up your bank account, you already have it on file. Sole proprietors, general partnerships get it after you do your DBA. And for all the other business entities that have to set up at the state, we would obtain the EIN after we registered the entity so that we knew that we were getting the EIN with the right name. You'll obtain the EIN by filling out what's called a Form SS4. You can fill it out online or do a paper version, and you'll fill out some contact information for the entity, the name, which is why already having the DBA or the entity set up with the state is a good idea, who's the responsible party, the person who's responsible for the EIN, information about your fiscal year and your business type. EINs can be pretty simple to obtain, but if you want to make sure that you do it the right way, hit me up. I can walk you through it. similar to an EIN. In some states, you also need a state tax number for your business. This varies by state. I did some research on it and I found that some states will assign it automatically. For some states, you have to apply for it. In some states, it doesn't apply at all, but that's worth looking into. An accountant in your state should be able to let you know if you need that one. It'll be helpful for paying payroll taxes in the state and the state income tax payments if you need it. Some states just require you to let them know your EIN. So when you go to pay state taxes, you're only providing your federal tax number. But in some states, when you go to set up payment for the state taxes, when you create that account, they'll just automatically create your state ID number. Okay, so you may need that as well. Now, another key phrase that you'll need to know as a business, or a key term, is the tax year. As a business, you have to determine your tax year, and it's a 12-month period that you'll use to track your finances annually. According to IRS Gov, a tax year is generally going to be a consecutive 12-month period. Now, there are two kinds of tax years: a calendar year and a fiscal year. We have our calendar year, which is January 1st through December 31st, right? But then you can have a fiscal tax year that's different than your calendar year. The fiscal year is also a 12-month consecutive period, but it doesn't necessarily begin on January 1st. Most people default to using the calendar year for their tax year. But some people choose, for various reasons, to use a fiscal year that's different than the calendar year. And that fiscal year becomes their tax year. For most of us, we're going to think of our tax year January 1st through December 31st, but some businesses elect to start their tax years differently. I know this is kind of interesting, but there are churches I've worked with and schools who will say, okay, we want our tax year to be September 1st to August 31st or October 1st to September 30th. They start their tax year with their most heavy-hitting financial month. And then maybe if it's a business that's based overseas and has a contingency here in the US, their tax year may be different based on the main corporate entity's tax year in that other country. But generally, your tax year is going to be January 1st through December 31st. And that is important because when you pay your taxes is dependent on the tax year. For instance, we filed taxes on the 15th day of the 4th month of our fiscal year. So now, defaulting to January 1st to December 31st as the tax year, fiscal year, calendar year, all the same, is what most businesses do. But if a business has a compelling reason for doing it differently, you would file a form with the IRS. I think it goes in your SS4 to notify them of your fiscal year. When you set up your record keeping for each year, it'll start on the first day of the first month of your tax year. And when you start your bookkeeping, you have to determine which financial accounting method you're going to use. There are two methods. There is the cash method, and then there's the accrual method. Accrual method, you're going to count your income as received as of the date that the payment is promised, not when the cash is received. So I'm going to use a subscription service as an example for accrual accounting method. FabFitFun is a subscription box I used to have. I loved it. I just started to get all kinds of things I just could not use up or finish using it. So I was like, I have to get rid of this. But FabFitFun is a subscription box with cool home decor, health and fitness and beauty products that you can use. And you can sign up for a quarterly distribution. You can pay up front in the year or pay throughout the year. So let's say FabFitFun decided to use the accrual accounting method for their bookkeeping. At the moment, I purchased a subscription. Let's say the cost of the subscription for 4 boxes in the year is $400, but I opt to pay monthly. FabFitFun could choose to do their accounting on an accrual method and say, at the moment she signs up for a year subscription, we're going to count that we have $400 in income, even though I've only paid the first installment of $100. They count $400. When the other $200, $300, $400 comes in on a quarterly basis, that is not added as additional income because they counted the income from my purchase is constructively received as the date I promised and have that and signed up for that subscription. So again, accrual accounting counts the income, the income is received, the payment is received as income as of the moment it's promised, regardless of whether you've received funds for it or not. Another example is if someone's providing like home construction or home repair services and you say, okay, the quote for this is $600 for me to do all this handiwork in your house. And then you'll make payment on the day that I come and do the work. With the accrual accounting method, when someone says yes and agrees and schedules, you would count that as $600 received, although you hadn't done the work yet. Conversely, cash accounting tracks the income when it's constructively received directly. With the FabFitFun example, they would count, even if I signed up for $400 subscription, they would count the income as $100, my first quarterly payment. And then when I make my next payment, income is another $100. So they would potentially say, okay, we project from this one person's subscription $400 in income for the year, but we've actually received in our accounting $100 from that first payment. Different business models are going to focus on each accounting method works differently for different business models. Now, since accounting is not my area of expertise, I want to recommend you to another YouTube channel where this guy knows his stuff. It's a gentleman named James. His channel is called Accounting Stuff, and he has some fantastic videos on the difference between cash and accrual accounting and how it may apply to your business. So I'm going to link his videos in this description so you can go and watch those because they will be very helpful in clarifying more about the cash and accrual accounting methods. A lot of us just default to using cash, but you may find that the accrual method is going to be better for you. Once you've chosen your accounting method, you're going to start to document your income and expenses and generate income statements on a monthly and annual basis. Income statements are where you track the income and expenses of your business so you know how much you've received and where you've spent that money. You'll categorize the income from different revenue streams, maybe from different products or different departments that you have or services that you offer, and then you'll track the expenses. This is going to help you with knowing what to report on your tax return each year. This is what we think of when we think of bookkeeping or accounting. Now I'm going to allow James of Accounting Stuff, shamelessly, I'm going to allow him to give you even more information on income statements if you want to delve deeper into understanding what are these financial records that you're keeping, how are they important, how do they apply, and how do you fill them out with knowledge. I highly recommend watching his videos again so that when you go to a bookkeeper or an accountant, you know what to look out for with how they should be doing your records. And then also, if you're doing it yourself, be informed. Right now, I manage my records on my own, and when I watched his videos, I found key things I could add to my bookkeeping to make it even better and even clearer. Now, in addition to the income statement, you're going to maintain a balance sheet. The balance sheet is where you list your current assets and liabilities. It's kind of I think of it as the picture of a quick picture of the financial state of my business. Where the income statement tracks the income and expenses over time, the balance sheet shows you the current state of your assets and liabilities, how much money you have, how much debt you have or payments due, and then what's your net income or net liabilities for that time. So we have our EIN for our reporting, for tax purposes and business needs. We know our accounting method. We've determined the fiscal year that we're going to use to track our income and expenses. We've determined our accounting method. And now we got to do the work. So we know we've got the structure. We have the process we're going to use to track the money. Where are we going to put it when we get it? And this is where the bank account comes in. It is imperative that you set up a bank account to manage your corporation's money. This is part of maintaining the corporate veil, keeping your finances completely separate from the businesses. If you're a sole proprietor, general partnerships, and you choose to use your own bank account, okay. For those of us who don't have sole proprietorships and general partnerships, we must have a separate bank account and keep all the monies completely separate to maintain the corporate veil. Now, regarding documenting the finances, tracking the income and expenses, filling out your income statements and your balance sheet, keeping your records maintained. You'll want to determine what program you want to use to do it. Now, QuickBooks is a super common one. They've really developed a lot that's good for small business owners, big business owners. They really do cater to businesses. Another common product out there is Quicken. And then for some of us who are starting real basic, we can start off with even a spreadsheet if we know enough. I started off with a very basic Excel spreadsheet because I hadn't started generating income yet for my business. But as soon as I had income producing products out there, I opened up a bank account and went ahead and purchased a basic QuickBooks subscription. Okay. So to review, as we're talking about setting up our corporate records for success, the first thing you want to do is go ahead and get an EIN. Only time where you may not need to do that is if you're a sole proprietor who does not have employees, but partnerships and anyone paying payroll taxes, you need to get an EIN and then set up a tax account to pay your taxes with the federal government and with the state, okay? And then it's important to note that when you obtain the EIN, you are going to go ahead and have to list your fiscal year, which will be either the calendar year, January 1st to December 31st, or a different consecutive 12-month period. It's 100% acceptable and normal to default to January 1st through December 31st. Just knowing that if you want to change your fiscal year in the future, you'd have to file a special form with the IRS. And then after we get our EIN, if you're going to start receiving income soon, go ahead and set up a separate business banking account. That's going to be necessary for the vast majority of us. The business entity that typically may not need to, commonly is a sole proprietorship. It's a good idea to speak with an accountant if you have a sole proprietorship and just see, hey, is it advisable or a good idea to have a separate account? And for those of us who have an LLC, any kind of entity registered with the Secretary of State, where we're really where it's important to us and necessary to maintain the corporate veil, standard business practices to maintain a completely separate business account in that business entity's name. Again, showing that it's not an alter ego of you, but a separate entity that you work in and for and manage, but it's apart from you. It has its own distinct identity, i.e. its own bank account, its own tax ID number and whatnot. And now talking about tracking our income and expenses. You will want to have a bookkeeping program and process in place that you can use to generate income statements and balance sheets to know the financial state of your business. You will need that if you are looking at getting investors. You're going to have to provide a financial picture of where your business is and be able to give proof showing the track record of your income over time and your liabilities. So having these financial reports are going to help you with tax season with the requirement, like I always say, it's going to also help you strategize to grow and dominate, because we are here to do business well and win. Now, like I said, my expertise is in corporate compliance. I want to go back to school and get do some studying in accounting, but I also believe in specializing where you specialize and working with other people who are also experts in their fields. We're better together as a community, and we need a tribe to work with us. So it's a good idea. Even if I was really savvy with finances, the amount of work it takes to maintain them, I would want to work with a financial professional. But how do you choose the right one? With the research that you're going to do or have done with your financial reporting, if you work with someone, you want to go ahead and do the research to know what you should be reporting yourself. And there are a few key things that I would do after I had done the research about that particular area. Number one, I would ask for referrals. And if I didn't know someone who knew someone in my area who could help me with finances, I would do research online and I would look at reviews, start there. But even then, reviews can be incredibly subjective. So after I found 2 or 3 professionals, I would talk with each of those professionals myself and say, hey, this is the kind of business that I have. I'm just looking for some help with doing the regular tax filings and general bookkeeping. What do you recommend, and what are some of the requirements that I need to do with my taxes? What services do you offer to help me? And what are the things that I need to do? So first of all, find 2 to 3 people from referrals, reviews online, that look like good potentials to work with. Number 2, you want to talk with them and ask them 3 questions. Number 1, what services, after explaining what you do with your business and what you think you need, number 1, ask what services they offer to help you out. Number 2, ask them, based on what I've explained, what are the requirements that I need to keep up with as far as tax filings? And number 3, ask them, what is the recommended accounting procedure for the kind of business that I have? If they look at you sideways, think again. I personally, even if I don't ask it in the best way, I'm not a fan of people who are like, oh, what do you mean by that? You just do this, this, and this. If you get defensive, it's not going to work, because we don't have time to tiptoe around each other's feelings. A good professional is going to pick up on what you're asking about, and they're going to speak to what you really need. What's required for my business? What services do you offer to help out with those requirements? And typically, how do businesses track their accounting, do their bookkeeping? What kinds of financial reporting are advisable that may not be required, but really advisable for how I manage my finances and my record keeping for my business? Ask that of the professionals. And then number 3, you're going to compare what they say to what you've learned and what they say. If you learn in your research, okay, these are the tax due dates, these are the tax filings, this is what a lot of people in my niche do or need regarding their bookkeeping. You do that bit of research, an hour or 2, maybe it takes longer, but you do that bit of research, and then you talk to 3 professionals, and 2 of them give you information that's relatively consistent and 1 of them doesn't, then that ain't the one to work with, right? You want to rule them out. If all 3 of them give you completely different information, I would share, like, okay, so this is what I found, but this is what I'm hearing. Please help me figure out where I'm off. Hear from them, and then do a bit of research to confirm it, okay? But doing your own research and then talking to professionals will help you see if you're working with someone who really knows what they're talking about, and help you see if maybe what you were looking at was not quite right. But at minimum, if what they say is consistent with irs.gov about the basic tax forms, you're good. But at minimum, their information should be consistent with what you find on irs.gov. Okay, and then from there, you choose the professional that works best for you. I created this plan of action because time and time again, I've watched people be burned because of what I said at the beginning. They talked to someone who said good things and kind of seemed like they knew what they were talking about, but they were a complete and total mess of a person to work with. And it broke my heart to see these people get taken advantage of because they just didn't trust themselves and said, this is something I cannot do. They discounted themselves and said, I'm just going to give it to this person because they seem like they know. The best thing is to always do some research and learn for yourself. Talk with people in humility. And if you find someone who's willing to educate you and walk you through it, that's someone who's really great to work with. Really, really great to work with. A good professional will want you to be educated enough to work with them. And they're going to want you to be educated so that you can win, knowing that if they empower you, you're more likely to trust them. So someone who gatekeeps so much is like, let me handle it. No. You are accountable and responsible at the end of the day for those financial records. They may not have to give you their company's tips and tricks and internal documents and processes and all that, but with the actual accounting principles that we're all required to follow, someone who is willing to share and willing to coach and help you is going to be fantastic to work with, and that's who you're looking for. I know you can find them. Well, that wraps it up for today's video. We have one more on tax basics for businesses, and then you have completed the Biz Startup Series. Don't forget, if you want to have a complete, thorough review of the compliance basics for your business, seeing what you have in place and how that compares with state, federal information about what is essential for your business, hit me up on my website, businessadvocate.co, or email me at info@businessadvocate.co for more information on that service. And then if you just want some help doing some of the research, talking through things, looking for information and professionals who can help you out, and going through these compliance basics, then feel free to sign up for a 1-hour coaching session where we can go over these compliance basics specifically for your business and find some information and resources and tools that can help you out, I'm here to serve. Thanks so much for your time. I look forward to seeing you in the last video of the series. Woo! You made it. See you soon.